G'day guys, welcome back to Mango Invest. What we're going to do is go through another portfolio update. Again, it's been a while since we've done one of these, but as we can see here, we've got the total portfolio equity of $376,000. However, when we make the translation to Australian currency, we're now up to $567,000, and that's without the cash as well. So we've sold a couple of companies here, okay, and then in US currency, we've got $8,811 in cash. So when you put the total together, it sort of comes out to be $580,000 in Australian currency, which is absolutely huge. We've reached another all time high. Just as the stock market just keeps soaring, which is good to see. We'll just have a look at the holdings. There's been a couple of changes here. So we can see Apple, we're down to 47 shares. We've sold a bit more shares there. Okay, so as we click into Apple, we can see we've done one sort of sell there, 20 shares at an average price of $231. And then, ever since we've increased in value another $4 per share there. So, but yeah, as it increases, I think it's important to take the gains while we can, just incrementally sell, little pieces of the company here and there. But AG&C remains. We have $61,000 of total equity. Alibaba, we've got $29,000 of total equity, of which $8,000 of that is in the negative. So here this is the last 5 years of the Alibaba's performance, and you can see a massive sort of downturn. It was only recently that we've had a massive upside in the Chinese space of all Chinese stocks. So we've got a little bit of a few month period there where it's gone up 50%. I remember with Alibaba, I was negative like $16,000 to $17,000, and now we're only down sort of $8,000 there. Going back to the holdings, the Bank of Montreal, still got those. I've been holding those for a couple of years now. That's just nice and steady dividends. A nice Canadian bank, same as Bank of Nova Scotia, another Canadian bank. And then they just pay me regular dividends every sort of 3 months. Coney, so this is the new addition to the portfolio. It's a dividend yield max. Okay, so it's the same as like Jeppy. They do covered call option strategy to increase to pay dividends out to their shareholders. And recently we've had a high price of 30, 29 over in this area here, and then a massive recent downturn. It's a very new company, so they've only been operating at the start of 2024, I believe. So if we go to the max, so they've really opened. When's that? So 2020, late 2023 is when they sort of started to form, and it's based off the stock Coinbase. So it's really depending on how that stock tracks, but very risky. Okay, it's got a dividend yield of 150%, which is almost unheard of, but it is a yield max. Okay, there's very little growth in the stock price, although given that it's actually very volatile, as you can see it here. But if we click here, I've only owned the company for a couple of days now, and I'm already up 11%, which equates to $1,622. So I think I've bought at a very good price. I don't think I'll buy any more. I've currently got $15,851 of total equity. Again, I don't see myself putting any more money in it, as it's not really a long term sort of option. It's just taking on a little bit of a risk to get a little bit more dividends here and there, and it's definitely I've put in a little bit of money that I wouldn't necessarily care about if I lost it. But we'll just keep tracking that, and we'll see how we go over the next sort of couple of months with that one. It's only recently just paid me a dividend of just over $1,000. So putting in sort of $14,000 to $15,000 into Coney every single month, you can look to get $1,200, $1,500 in dividends every single month, which is pretty cool. Jeppy, sorry. Still own those guys for multiple years. We're now up to over 1,000 shares. Total equities, over $61,000, and we're actually up 7%, which is pretty damn good. Been holding this company for a long time now. Same as Coca-Cola, so $14,000 of equity. I do want to increase the position, although it's trading very high. we're up 36% since we've owned them, and it equates to $3,816, and that just pays a nice regular dividend there. LTC, been holding these guys for years, up 7%, which equates to $1,000. Another real estate investment trust based in the US. Microsoft, this is another company as well that I've been incrementally selling off as it sort of increases in price. So I did own, years ago, like hundreds of shares, but now I'm down to 27 as that stock price sort of rises. Just taking the gains where I can and just, waiting for a market correction. But yeah, up 67% overall in the 4 years that I've owned them. Average price, where's that? Yeah, average price for Microsoft is $250, and it's currently trading at $418. But yeah, so just under $5,000 worth of profit so far. But most of the profits now sitting in the cash position or other dividend companies because I've recently sold. Realty Income Corporation, yeah, 628 shares there. The total equity is $40,000. Again, I'd like to add to this company here because it is the dividend paying company, as everybody says. But yeah, up 11%, which equates to just over $4,000. Very very happy, very comfortable with this company here. The current stock price is $64. Although I just like it to go back down to under 55, maybe $49 per share, and then I'll start to buy more. QILD, just under 3,500 shares, so it's a massive massive stake in the portfolio here of $63,000 of total equity, of which 4.68% is total profit, which equates to $2,819. So very happy with QILD. SCHD, I've only got $22,000 of total equity. It's up 13%, and it's that equates to $2,606. But again, it is trading very high. Everybody knows SCHD. I think everybody's very comfortable with SCHD, but it is trading very high. So I figured, let's build up some of the cash, and as soon as that sort of drops to a share price that I haven't really thought about yet, but sort of thinking around, 24, 20, maybe $20 per share if that happens. I'd be pretty keen to buy into more SCHD. So that's the company that I'll target within the next year or 2 years. I'll look to build up that position there. Tesla, just under 40 shares there. Equity is $8,711. I'm up by 278%, and that equates to just over $6,000. The reason why it's so high, I invested extremely early when when the share price was extremely low, and then they went through multiple stock splits, and therefore the average buy price is now $58.28. Although the price now is just over $200, so that's why I'm up quite a bit. I didn't put much money into it, but it's just because I've held for so long. We'll just have a look at the dividends and just what's been happening more specifically with the portfolio. So we'll go. Where are we? We'll view all. Click the US tab here, and then we'll click the filters. So we'll check the buys, the sells, the deposits. I haven't made any transfers. Should be any withdrawals, dividends, and we'll leave it at that. But we'll just go down to the 1st of October, and we'll just sort of cycle through the dividends. So LTC, SCHD, and QILD paid me all on the 1st of October, and that really equated to like $700 worth of dividends just alone, maybe even $800. And then we made another deposit of 3,000 US, which was actually $5,000. Oh, there you go, $4,500 Australian. And now I think, we made another deposit later on. But Coca-Cola, they paid me another dividend of just under $100. And we'll talk about me selling SCHD. So I had, like 10, just a little bit over $10,000 worth of total equity. But SPHD was, again, just another monthly paying dividend sort of ETF, but it was really only 3%. And I had over $10,000 in there, and wasn't really paying me anything. So I thought, what, I'll sell that, and then I'll buy Coney. Coney was just like a little bit of, like we were sort of saying before, just bit of risk, high dividend yield. We'll just see how we go. So I sold SPHD, and instead of getting, you know, like $80 a month with SCHD, I've put that all into Coney, and that ten to $15,000 is now getting me, over $1,500 every single month in dividends alone. So, that's the whole goal of this portfolio, is the cash flow and the dividends that are coming in, as well as a little bit of the growth with Apple and Microsoft. But that was the main sort of reason selling SPHD, just to get that higher dividend yield. Yes, I can accept the extra little bit of risk, and I'm very comfortable with doing that. Jeppy, again, every month, it's paying me $400 of dividends. Um, AGNC, another massive paying dividend company here, $696 worth of dividends. Realty Income Corporation, very consistent, 165 every single month. And then this is another deposit, so I think it was $5,000 Australian. The significance of that is this year I made a target goal to invest $30,000 Australian this year. I've now surpassed that goal. The total that I've deposited this year is $35,000 now, and I think even by the time we get to December, we could probably push that up to $40,000 to $45,000 for the total year. And that's I think that's a very good number to invest just in 1 year, just with my own money. And then you think of capital growth plus dividends plus deposits, how quickly the portfolio is rising, and that's the reason why we've reached all time highs now. And then recently just sold Apple, and just like we spoke about, we saw that the rise in the stock price, and just the taking the opportunity to sort of take the gains where we can. But yeah, that's pretty much everything that's happening within the portfolio. We'll head over to track your dividends, and this is the total number that we have. So this is the equity, but also that $8,000 worth of cash, and we've now reached an all-time high of $385,000 um, in in US currency, which equates to $580,000 Australian. And if you look back on one of my previous videos of my net worth, it's now increased. So we're now going to, we're starting to push the $600,000 worth of net worth, which is pretty good. But the yield on cost we're getting for the portfolio, and this is largely due to Coney, is 13.27%. And the annual income is now over $47,000 US. So, what's that? If we do the conversion, it's probably like $70,000 Australian just in dividends every single year. And then here's a monthly average income of just $4,000 US currency every single month, which is pretty huge. And then if we click the dividend or the annual income tab here, these are the high paying dividend companies here. So Coney's paying me over $21,000 every single year. Again, it's just a projected number, so they can pay less, they can pay more, etc. AGNC 8,000, QALD 7,000, Jeppy 4,000, O 2,000, and LTC 1,000. And then it's all the other companies are just sort of just chump change, like not a lot of money there realistically, but not bad nevertheless. But so with the expected upcoming dividends, we'll have October, so projected this month. We're going to be getting $3,400 US. The next month, 3,800. Just under 4,000 in December, and then kicking off January 2025. So far is $4,500 US. So pretty insane. Cash flow coming in really. If we click the diversification tab, let's have a look at QALD's position. It takes up 16.3% of the portfolio, moving down to AGNC of 16% and Jeppy of 15.9%. Let's have a look at the cash position. So it looks like Tesla is coming in last at 2.3%. And there you go, the USD. So the currency or the cash that's sitting in there is equates to 2.3%. What I want to see is, as the dividends rise and the more deposits we get, is this USD or the cash position comes right up to here to where Alibaba is. We want to get $30,000 to $40,000 to $50,000 in cash. And that way, we've got a little bit set to the side, to take opportunity of a market correction if that really happens. But yeah. Thanks for watching the video, guys. If you did want to sign up with Stake and get a free stock, just use the code here, ChrisM965. I'll put a link in the description if you just want to click on it. Sign up with Stake. You get a free stock, and I'll get a free stock. So it's free money. So why wouldn't you do it? But as always, guys, give me a comment of what you're investing in, how your dividends are going, etc. That'd be really good. And I'll catch us in the next one.